Good afternoon, everyone, and welcome to the ITUS video snippet series. Through this, we aim to open up our fund, philosophy, and process to both our current and potential investors and partners. In this episode of the snippet series, we take you through why do we look at cash flow driven growth as a core process in our portfolio. While analysts in general focus on growth, we focus exclusively on cash flow growth. The difference being, focusing on the latter means the management can translate earnings into actual cash on the balance sheet. And this implies the reduction of chances of manipulating the numbers. We're looking for two key traits in the management of the companies in our portfolio. Every business wants to grow. However, it's important to see how this growth is getting funded. When the business generates cash, it ensures that the growth of the business is funded through internal accruals rather than relying predominantly on debt, or worse so, equity to fund future expansions. Second, as the cash gets reinvested into the business, it's important to look at the incremental returns on capital that the business generates. If this exceeds, for example, north of 20%, we as minority shareholders have the potential to hold on to a business which can compound significantly over long periods of time and generate meaningful shareholder returns. To explain this concept, let's look at a portfolio company of ours which we've owned since roughly 2017 and we continue to own. Right? So Syngene, which over the last 4 years has been continuously reinvesting its cash flows. Today, it's roughly approximately 10% of its current market cap. That's the quantum of investments that they have done into capacity expansion for building out its manufacturing facilities. Now, looking at its earnings effectively means over the last 4 years, you've been looking at fairly depressed earnings as this capacity has eaten up either in the form of depreciation, it's taken time to go live, the fixed asset turns have still not materialized. However, in this entire 4 years, the cash flow growth continues to be as robust as ever, and it's grown at north of 20%. And on top of that, the incremental returns on capital on the core business has been 23%. This just illustrates and gives an example of why cash flow growth continues to be the core driver of our portfolio process at ITUS and why this translates into shareholder returns as far as an investor is concerned.